Bollinger Bands is a widely used technical indicator in Forex trading and other financial markets. It was developed by John Bollinger in the 1980s. Bollinger Bands are designed to provide insights into the volatility and potential price reversal points in a market. The indicator consists of three components: the middle band and two outer bands. Components of Bollinger Bands. 1. Middle band, SMA. The middle band is a simple moving average, SMA, of the price over a specific period. The most common period used is 20 days, but traders can adjust this period to suit their trading style and time frame. 2. Upper band. The upper band is calculated by adding a specified number of standard deviations, usually 2, to the middle band's value. It represents a threshold beyond which the price is considered overbought. 3. Lower band. The lower band is calculated by subtracting a specified number of standard deviations, usually 2, from the middle band's value. It represents a threshold beyond which the price is considered oversold. Bollinger Bands are used to assess the volatility of a market and identify potential price reversal points. Here's how traders interpret Bollinger Bands. When the price is experiencing higher volatility, the distance between the upper and lower bands widens. During periods of lower volatility, the bands contract. Traders use Bollinger Bands to gauge the potential for price expansion or contraction. Prices that touch or cross the upper band are considered overbought, suggesting that the asset's price may have risen too far too fast and a potential reversal or correction could be on the horizon. Conversely, prices that touch or cross the lower band are considered oversold, indicating potential buying interest and a potential rebound. When the Bollinger Bands contract tightly around the price, it's known as a Bollinger Squeeze. This suggests that the market is experiencing a period of low volatility and that a significant price movement might be imminent. Traders watch for price breakouts above the upper band or below the lower band, which could signal the start of a new trend or a continuation of an existing one. While Bollinger Bands are a useful tool, they are not foolproof and can result in false signals. Sudden market news or events can lead to price movements that don't align with Bollinger Bands readings. As with any technical indicator, Bollinger Bands are most effective when used in conjunction with other indicators and tools to confirm signals and patterns. It's also important to incorporate risk management and have a comprehensive trading strategy.
Are you a trader? Aren't you profitable yet? Do you need a free economic calendar? In MetaTrader 4, go to Market tab and search for Porsage. You can use Porsage News utility for free.
We express our gratitude for your attention. Porsage Forex Academy ensures weekly Forex and crypto analysis and forecast to keep you updated. Optimize your trading decisions with our daily Forex and crypto signals. Support us by liking, commenting, and subscribing to receive our profitable signals and insightful analysis.